it's really awkward. I was going to do that exact bit. I prepared that exact bit, and now I don't have anything at all. The one thing I was going to ask people, if stay standing if you've ever said you're going to democratize financial services, or permissionless innovation, that's another one, or the future of finance. I think those are the bingo words for me. With that, I'm really excited for our panel, and I think we're going to make it really fresh and interesting in approaching the question of what's going on next, what's happened, and what the words even mean, like what it is that we're talking about. And so with that, I'd love to ask our panelists to say hello, say a little bit about what they do, and then we'll dive into the topics. Emma, you go.
Hello. Can you hear me? Can you hear me? Oh, can now. My name is Emma Lovett. I work at JP Morgan. My role there is on the markets DLT team, looking at debt products. Prior to that, I worked on the fixed income syndicate desk at JP Morgan for too many years to count.
Hey guys, I'm Matthew James Lowe, head of special projects at Fasanara Capital. Effectively, what I am doing is looking at a traditional hedge fund and the way in which tokenization can play a part in setting up a hedge fund for the next generation, and then mobilizing capital via a venture fund to a bunch of pre-seed and seed startups.
Hello, I'm José Luis Perán from VASS, which is a Spanish company. And I've been helping customers to develop their blockchain solutions for 6-7 years and making it true, making it possible with many blockchain solutions in the crypto world, in the finance sector, and for a lot of years already.
Hello, I'm Jason. I'm from Centurion. We start from A to Z. So we make token, we have exchange, we have a wallet. Whatever you are questioning about crypto, we have it. In Europe, Southeast Asia, and I'm from Korea, so we cover everywhere.
So we've got a really fun range of backgrounds here. I think you have a phone call. Is it going to decentralize the picking up of the phone call, maybe? Anybody else want to pick it up? You can shard the phone call. No? It's only the panelists laughing. It's really awkward for me. Thank you. There we go. Okay, so I'm going to start with a rhetorical question, which is, what is financial services? I'm going to talk for a little bit to give you time to think of an answer. This is just me buying time. So I think there's been a lot of panels, right, over these last day and a half that's talked about DeFi, that's talked about fintech and digitization, transformation, tokenization, all these things. But I want to pin down what financial services even is and what it's for. Emma, I'd love to ask you that question. I don't know if it's allowed, if that question's allowed, what financial services is.
So that's quite broad. I guess for me and for my background, financial services for me obviously concentrates on something like bonds. And what we do is we offer governments or high-grade corporate companies the chance to basically write an IOU that is then distributed to a selection of investors, such as insurance companies and asset managers who have got a lot of cash to spend, and they then invest it in those bonds. And that's a very traditional, one of the oldest methods, one of the oldest financial markets.
What's the point of a bond? What's even the...
So the point of a bond is that it helps in the broader capital market structure of a large company or government to basically have cash liquidity. So you can receive a lot of cash, which allows you to spend it on what you want. Much like a loan. Like we would, if we wanted to buy a car, we would just go out and get a loan. A high-grade corporate would basically issue a bond, and then that would allow them to, often they're for general corporate purposes, or it might be in order to pay off a bond that's about to mature, or increase employees' salaries. We can all hope, but whatever it is, they can access cash, and spend it as they need.
I'm not going to say that the point of financial services is to increase employee salaries, but I agree with you about the use of cash for spending and to access the ability to build stuff that you don't have yet. Jason, same question to you. What's the point of finance at all? Why do we have it?
I don't know. For me, finance is just very simple. Buy, pay, payment, or also loaning. Anything goes with transactions. For me, it's finance. So it's not go to the corporate level. Just let's go to the basic level. Whenever you send the money, receive the money, borrow the money, repay the money, I think that's the finance. So I think that's the things that I will talk about today, because blockchain and crypto will try to take over.
Watch out. Jose, what's wrong with financial services? If it's just, here's how I pay, here's how I lend, I need a project in the future, and I'm going to finance it through some source. You do a lot of digital transformation work. What's wrong with it? Why do we need to bother with any old eras or new eras or any of this stuff?
Well, I don't think there's something wrong with financial services. There's probably something old into many financial services that we are here to transform, to make something better. We are used to some kind of financial services that it has been done on the same way for hundreds of years even. And I think we need to get used to the understanding that we are in a different world. The world is totally different than it was 20 years ago. I don't want to talk about 100. The world is totally different now than it was 20 years ago. And financial services is adapting, it's moving, it's transforming, it's transforming to something more digital, and I think blockchain technology it helps both financial companies and customers of financial companies to become something better.
Why is digital a good word? This is a great New York Times article a day ago. It was about technology journalist having beta access to Microsoft Bing AI chatbot. Do people know about ChatGPT and Microsoft Bing? Yeah. Who yelped? I thought so. I thought
it's his work.
I thought it would be you. Anyway, so there's this article about how the journalist was talking to Bing chatbot, which is connected to the internet, unlike ChatGPT, which is disconnected from the internet. And he was talking to the chatbot for 3 hours and asking it personal philosophical questions. And the chatbot professed love to the interviewee and told him that his marriage was broken and that he should leave his wife for the chatbot. It's true. It's in the New York Times, so everything that's on the internet is true. And that's a very digital experience. So why is it good for financial services to be digital? Why do we? What is the aspiration there? You're welcome. It's an easy prompt.
Yeah. Because financial services must transform to digital companies. It's mandatory for everybody in the world. Do you think somebody here or in Barcelona or in Spain or in Europe that is not using financial services, financial companies, or it's not using something digital? You must adapt to the new technology, to the new situation of the world, and it's going to make you easier to do business, to provide services to your customer, to help people to get to more products. There's a lot. I only see advantages in digitalization.
Yeah, I think the really profound piece that you said is you must adapt to the new realities of the world.
Yeah,
right?
The world has changed.
That's unavoidable. So, Matt,
and I use ChatGPT on a daily basis, all day.
How are you feeling? Are you okay?
I'm feeling okay.
Yeah.
ChatGPT
How
is
are your
fine.
personal relationships?
ChatGPT is fine. I like ChatGPT.
Because it's not connected to the internet. You know,
Yeah.
I've seen enough movies to know. That's sort of, you don't put your AI on the internet.
Yeah, we have a lot of movies
Yeah, it's
talking
not-
about
it's not-
that,
it's
and
not
everybody
right.
knows that.
Anyway, I don't know why you keep taking us off track. Matt, so to continue this concept, right, of like, what is financial services for? And then the repeatable patterns that Jason articulated, payments, savings, banking, insurance, investing, like 100, 1,000 years ago, these are, you know, we use different technologies for them, but they are repeatable patterns. And what Jose said is that we want to have these in the shape that they, so that they reflect the world. Can you talk a little bit about the different eras, kind of the recent eras of maybe segmentation or technology? And I'm thinking about Fasanara in particular. You know, we've had the era of traditional financial services, then we've had the fintech era and digital lending that Fasanara is doing, and then we've got the crypto DeFi era. Can you open up these ideas for the audience? Like, what are some of the definitions of these three things, and how do they interact? How are they different?
Yeah, easy question. As always, thanks, Lex.
In
So
10
like
seconds.
the eras of financial services have definitely kind of been aligned to the way in which we have evolved with the internet. I think traditional financial services, where we used to write like stockbroking paper and have a bunch of mad people in an exchange throwing a bunch of papers around, trading stocks, those days are over, and kind of you see those institutions being mothballed and go into like high frequency trading platforms. We've definitely got an incredible crypto trading arm that processes hundreds of millions of dollars every day on a market neutral strategy on crypto. And it's like three developers, right, that are just constantly writing code about refining the algorithm to find value and arbitrage. But you know, fintech definitely evolved with the onboarding of financial services onto the internet, and we saw stupendous like failures, but then we still saw some like incredible successes. We saw, you know, things like PayPal that really defined the way in which people make digital payments, and that definitely is not a mothballed institution even today. Even a couple years after its inception, it's still fairly relevant. We still use PayPal. You know, if you use eBay, which is a dying marketplace, but PayPal is still something that's still relevant today. And then you've got neobanking that kind of came on the backs of PayPal and the innovations in payments, where you have, you know, the consolidation of financial services into a bank that doesn't have traditional brick and mortar facilities. And you can pretty much open a bank account if you have a digital presence in a matter of minutes, and capitalize that bank account in again a matter of minutes, which is pretty insane. And then you're seeing this like beautiful consolidation of additional financial services into these monolithic financial platforms that allow for payments and social media and get data to be compiled into the way in which you can then get access to loans and credit and mortgages and other goods and services that you wouldn't normally see. And you've kind of seen that proliferation in embedded banking in like China, right? With like Didi and WeChat and things like that, where, you know, they started out as like Didi was an Uber spin out, and then it just started understanding that people are bored in the back of a cab, and we may as well just sell them some financial services, and they turned into like a really powerful app, which is insane. I mean, they've died, but you know, that's politics aside. And now we're in this beautiful evolution where you now have DLT rails that allow for data to be sovereign, but also data to be public in a way in which And I was listening to a panel yesterday, and there was a Financial Times columnist really threatening the founder of Animoca Brands over why data should be public on public blockchains. And I was trying to scream in the background that not the entire transaction is on the blockchain, right? You can't see what that transaction was for. It's just a transaction that has an encryption. But these DLT rails have really kind of paved the way in which, a traditional hedge fund like Fasanara are definitely thinking about accessibility. And I think that, that's the reason for financial services is accessibility, using goods and services, using items of value to access other items of value for accessibility, for utility, for value generation. And that's kind of the way in which we're looking to evolve at Fasanara and looking, at something as boring as a hedge fund. I mean, they are really boring if you really break them down. They're not great.
It's okay. It's okay.
And then like how tokenization of real world assets, which I think is one of the biggest thematics of 2023, is going to add value to people to get access to something like a hedge fund, to get access to the value that a hedge fund can generate.
So I think there's a kind of a key theme, which is there's not one thread of digitization. There's not like, oh, the thing's on the internet and we're done. It's these waves of kind of underlying technological shifts. And we've had the shift of digital distribution with fintech, and now we've got the shift of manufacturing financial instruments on chain using really different kind of architecture. And that's the forward look. Emma, question for you around, we understand kind of the steps of technology evolution that are in place, and it's much more difficult to take a developing technology and then integrate it back into a gigantic venue that's doing huge volumes or that has established process flows. And I think there's a really big difference from, we're going to help people own MakerDAO assets and vote in their governance versus we are going to strip down our wholesale banking and rebuild it on Onyx. Maybe that's what JP Morgan did, I don't know. But maybe. So the question is, what's the motivation of using this future technology on stuff that's already working? And then what are some of the things that JP Morgan has done that are working, that are not sort of stories that we tell each other, but you're like excited that they're in the business and they're functioning?
So I guess that what we're primarily doing, I think it's true to say that the status quo at the moment is that these aren't off-the-shelf products. Nothing is off the shelf at the moment. Everything is taking a big initiative, a big project. It's the tech, it's also the regulation. Everything has to be worked through, which means that, if you wanted to just buy something tomorrow, there's actually very few products that you can buy. But there does seem to be a flight to digital bonds. 2 were issued last week. 1 was issued a week before that. So it feels like that's where the market is converging.
Where were they issued?
So 1 was issued in Germany. 1 was issued in Hong Kong. Then there was the EIB sterling trade that was issued. Well, it was Lux, but it was a sterling issuance. So it looks like that's sort of a little bit of a convergence on what kind of digital assets might be the first in a really highly regulated market. But talking specifically about JP Morgan, we have a product that's used every day, intraday repo, which is used using our Onyx Digital Assets platform and JP Morgan Coin. And I think it does demonstrate that there are use cases there. I agree that I feel that the back end of the financial services industry is quite complex in the sense that you've got one system that's attached vitally to another system that's attached vitally to another system, and they're all really old. And so if we were inventing the market today, there's no doubt that we would be using technology that was far more modern. We go out in our everyday life, we get at our phone, we know what the weather is instantly, we know what the time is. we haven't really updated the financial industry, especially the back-end systems. They're all quite old. So I do think there's a need to sort of just take a look at all of that. But it's not easy. You know, it's not like we can just insert blockchain technology and be done with it. So, you know, I think it's just going to be bit by bit. It's going to be something that's additive. It's going to be complementary. It's not going to be something that, you know, we wake up in a year's time and everything's on DRT.
I like to think that blockchain, as like other technologies, is a tool to help you do something in a better way. You don't need to focus on, I want to do blockchain. I want to do this, but faster or better or cheaper. And blockchain, as like other technologies, helps you to do that.
Is it working? Yeah. And I was just going to say that I think that access to a single ledger in post-trade operations is potentially huge. The amount of time that's spent reconciling, the amount of time, energy, and resources that's spent reconciling either a failed trade or a lost trade or a trade that's an error, the thought that every single counterpart can log in and access the same copy of something, I think that's massive. But it's just, you know, adopting that.
Yeah, we assume that just because you send somebody a text message and they see it instantly and you both see that text message, that that's the state of all technology, and not like a carrier pigeon on T+5. That joke has no conclusion. It's just. So I want to double click, Jose, on the same point with you, which is and maybe ask. Without naming names, like, what is the most awful and shocking Scotch tape, spaghetti code, financial infrastructure that you've encountered? Don't tell us the name, but just what's something that here people would be surprised to hear that, you know, billions of dollars are moving on that. And then on the other hand, what are some of the more successful blockchain implementation projects that you've worked on? Like where, again, it's not PowerPoint deck sort of Deloitte pitch, but we did it and it works, and that was worth everybody's time.
Well, I think that the technology helps business process. And when you have a business process which is something manual, something that has been done in the same way for years, and you use technology to help people to transform that in a better way, and you make people happy, you make people more productive, you make customer happier because they can do things that cannot be done, could not be done before. I think that's success, because you are helping everybody to do things better. And I don't remember the other question.
It sounds like you're protecting some of the things that you've seen, which is fine. I'm sure there are NDAs in those contracts. So Jason, question for you: is that what all this stuff is for? Is Bitcoin for, you know, for big banks to redo their capital market systems, and you know, are stable coins really just a way for governments to track your transactions and turn off your wallet if you say something wrong? Is that a leading question?
No, it's not really. Because when the blockchain first came in 2009 with the white paper of Bitcoin, it was irreversible, no double pay. So they are just tapping on the payment part just a little bit. And now crypto came into the market, and you guys are thinking very wrongly right now, because when we start the blockchain and crypto, we have one goal. It's easy to send it to other country without any hesitance or any delay. Because traditional bank system take 3 to 7 days to send it to some other places with a SWIFT code system and everything. But since our topic is financial new era, let's think about 2 decades at a time. If you go back to 20 years ago, what happened? Internet banking came out, right? Before internet banking, we have to go to bank, write a note, tell the teller I want to send it. Go 20 years back again. That's 1980. That's when I went to U.S. and my mom and dad sent the money from Korea to U.S. took like, what, 7 to 8 days, but there's the interest rate, there's the exchange rate, there's so many layers. Back end is so complicated. But let's come back, 2023. Now you can just send the money by click the email address and you can send the money. With just phone number, you can send the money. But I'm from Korea. So Korea is the one of the country who connected all the bank system as one. So you have one bank, then you type your ID and password with the DID system, all bank is connected. So bank to bank is easy, bank to outside is easy, everything is easy. It's coming. So blockchain in 2017, I will say blockchain will take over, cryptocurrency will set the new rules, but guess what? 20 years, the financial technology is following up. So what blockchain can do, traditional system can do also. So now we need to ask, what's the benefit of using cryptocurrency and blockchain? Blockchain, going forward with the chain, so we keep saying that unpenetrable, unhackable, but you see the news saying that slowly, every 3 months, hacking happened. So I was really shocked. The blockchain is supposed to be very secure. But so I was a little bit shocked, but then I heard, because it's side chain, shadow chain, cross chain, we'll keep making something new. But traditional blockchain is good to use. I think bank system backend, in a certain level, blockchain will help, but not the whole thing. So we cannot replace the financial service, but we can boost and support financial service. Like she said about JP Morgan, backend is, we don't even want to know, because this is just a lot of depth. Thousands of papers we need to go through. But in front end, what we want to see, UI, UX, one-click sending, one-click seeing, one click to see all text coming in one place, and on app shows all the things that I have to pay this month, showing that's finance for us. The blockchain can help that with a D app. So that part we can help. But in the replacement of the traditional finance, impossible. That's my viewpoint.
Great. Matt, I'll have a contrived question for you as well, don't worry. So I want to tease out the difference between the technology and the asset class, and that's kind of what I'm trying to get at, which is it really just a layer to make just another transaction layer in a sea of workflow automation tools? Or is it about the creation of a new asset class? And I know Fasanara does a bunch of on-chain trading of tokens, and those tokens don't need to be government-issued bonds. The whole point is that they're Web3 native, and that the role of anything other than Web3 software in Web3 finance, DeFi, is absolutely nothing, except for how do you bring money over. So can you talk a little bit about how, as an investment manager, you think about the asset class versus like these pitches of why technology is good for our back end?
Yeah, it's something that like I'm facing the question of at this very given moment, because we wanna think about the ways in which tokenization can really benefit the fund, but by no means are we saying that like, or we're just going to start building the tokenization of the entire engine, right? We'd be very stupid to do so, because there's a lot of complexity in that, and I think you need to really understand the complexity that sits, behind the system, right? And the behind the system is really complex. So what we're in fact looking at, and that, I think that's inevitable, right? Like the new asset class is definitely the long-term goal, to again enhance the accessibility and bring new value to new customers, and make sure that everyone has the optionality that they want, right? If you want 100% exposure to hedge funds to in your retirement annuity, then God bless, go do that, right? Like if you want to invest in Apple stock, you go do that. But what we're definitely looking at now is like how to piecemeal and take a really optimistic approach to which facets can be tokenized to at least derive some benefit, so that as an institution that's, you know, FCA regulated, and that I kind of swore to myself that I wasn't going to bring up regulation, so I'm not. But I'm just going to say that, you know, we have to do things in a very standardized approach where we can show tangibly the benefits of what this new technology brings. So yes, in the short term, it will be a layer that, you know, just addresses accessibility or just addresses cost efficiency. But by no means is that the be-all and end-all, or at least the goal, just to piecemeal and tokenize the thing one bit at a time. The goal is to essentially bring to the market an entirely new asset class that couples all those benefits, and make sure that it reaches, you know, the demographics that you speak of, Jason, you know, around the world, right? Like, you don't just want a fund that's jurisdicted in Luxembourg to be offering, you know, European citizens access to an asset class, whilst other citizens around the world don't know what that is, right? You want to bring a globalized approach to financial services, but you want to do so in a way that respects what has already been built, and do so in a way that everyone understands that you've done the approach to the most effective way. And I know that's kind of like a wishy-washy answer, but like it's fundamentally true, right? Like, that's what we're all trying to work really hard towards. We're all in, you know, majority of us are in financial services, and it sucks not to sit here and go like, oh, we're going to, in the next 6 months, the world is going to change. And like, you know, can't wait to tell you, we've got to do it kind of in a very respectful manner, because otherwise you're just shilling some crazy, scammy, fun protocol.
It's a hard note to end on, so I'm going to draw it out a little bit. So I think that just the flourish that I want to end on is, you know, because we don't have sort of the most DeFi degen version of a voice here, right? But in addition to everything that we've said, it's also true that the asset class isn't to be built; it's already there. And it's already functioning, and it has for years, right? So the stories that Stani from Aave, or from MakerDAO, or from Uniswap that we hear, those are real and battle tested and are there. So these are all simultaneous lanes. In the same way that, you know, you can find a horse to ride today and go on a horse ride, or you can get on a car that eats up gasoline and you drive stick, or you can get into a fully automatic that's completely electric, or you can get on Zoom. Zoom doesn't yet, you know, disintegrate you and teleport you into another place. That's to come. But all of those sort of transportation methods are available to you. It doesn't mean one doesn't work, right? And so, as with payment systems or capital markets, or like all of these are simultaneously happening, and the Web3 native asset class is already here and is happening. And I think for me, what's exciting is that there are different sources of value that stand it up, right? So there are big spending by JP Morgan on pushing forward integration of blockchain systems into existing markets. There's big spending by industry to have advice on how to integrate various tokenization initiatives across their business lines. There's institutional investment and retail investment into crypto exchanges, less so now for good reason, but generally speaking, right, into holding coins and through wallets and directly and so on. And then there is sort of consumer retail spending and capital gains that are going into protocols and being used on chain as part of Web3 commerce and coming off NFT projects and DAOs and so on. So all of this stuff is happening simultaneously, and it kind of wobbles around in its sequencing. Right now we're in a pretty wobbly place, but that stuff smooths out over time. With that, I've run down the clock, which was my goal, and I want to thank our panelists for fantastic answers, and thank you, audience, for the occasional awkward laughter.
Thank you.
Thanks, guys.